Bulls purchased 80% of the share capital of Stormers on 31 December 2019. Assets, property, plant and equipment and the investment in the Stormers. There we see it is 100,000. I just want to change this. Not at fair value. At cost. Right. Investment in Stormers 130,000, and we will see that the total ordinary shares is 125,000. They've acquired 100 out of the 125. So here we can work out, they don't have to tell me what the interest is that they've purchased. We can work it out, it equals 80%. So if Bulls have acquired 80%, it means that there is a non-controlling interest which will equal the other 20%. Good. That inventory, that bank, that debtors, then equity and liability is consisting out of ordinary shares, retained earnings and other reserves, non-current liabilities 175,300, and then current liabilities creditors 90,000 and 139,500. All net identifiable assets and liabilities assumed at acquisition were valued at fair value, and they wanted to do the pro forma journals and the consolidated statement of financial position. Now, guys, the first thing that we have to do with consolidation is to make an analysis of the subsidiaries' equity. So that is the 125, the 40, and the 25,500. And if I'm actually going to add it all together, I just want to make this a little bit bigger. If I'm going to add all the share cap, the equity together, those three together gives me then a total equity of of 187,500. Now Bulls have only acquired 80%. So 80% of that amount equals 150,000. The outside shareholders, the non-controlling interest, they have 20%. It's NCI. So 20% of the equity that they've acquired equals 37,500. Now, what did they pay for this 150,000 equity stake that they've purchased? They paid 130,000 rand. So they paid here. Guys, did they pay more or less than the total value of the equity? They paid less. So there's a difference of 20,000 rand, and that 20,000 rand is a gain on a bargain purchase. Okay, I'm just going to say BP, yeah. A gain on a bargain purchase, which equals then 20,000 rand. So, and that the next step is actually to prove that that thing is 20,000 rand. So how are we going to do that? Well, we're going to say, number one, the consideration paid was 150,000, but that only equates to 80% interest in that entity. 150,000, only 80%. So therefore, I have to add the non-controlling interest because they actually have the other 20%. If I want to compare that with the total net assets of the entity. Now, what is the total net assets of the entity? My total assets was 502,300, but they had liabilities of 175,300 and 139,500. So what is the net asset value of the entity? It is 502,300 less 175 less 139. So the net asset value 187,500. So if I take the amount that I've paid and I add to it the 20% which belongs to the outside shareholders, and I subtract from that the net asset value of the entity, you will see that there was a gain on the bargain purchase, so there's a net credit that's going to remain there of 20,000 rand. So it was a bargain. They paid less for it than the actual what it was actually worth. Now, if we're going to move to our pro forma journals, what do we have to do with the pro forma journals? Well, the first thing that we have to do is we have to take out this investment in Stormers of 130,000. And the second thing that we have to do is we have to take out the equity capital of the Stormers. Now, because Bulls only acquired 80%, it will also mean that we have to bring in the 37,500 Rand of the non-controlling interest, because there, that 130,000 is only the 80% that we're going to remove. So, if we go back to our consolidation worksheet, we will see that, well, the first thing that we're going to do is we are going, let me just get rid of this, we are going to copy and paste the statement of financial position of Bulls and Stormers exactly as they give it to us. So that one will be exactly the same as in the question. So these two statements we are going to copy and paste, and that is the first three columns of our worksheet. Then we are going to post our pro forma journals. So our pro forma journals is our consolidation entries. We have taken out the investment in Stormers. We have eliminated the equity of Stormers. That is 125, 40 and 22,500. What else did we do? Well, we brought in a gain on the bargain purchase, 20,000 Rand, and there you can see statement of profit or loss. So we're going to recognize that in the income statement, 20,000 Rand. And we've also, in our pro forma journal, brought in our non-controlling interest of 37,500. So those two needs to be added in our consolidated financial statements. And there you can see that, 37,500 non-controlling interest. Great. Long-term loans, there was nothing. Can you see here, guys, before I'm going to get too far? Our consolidation entries, if I add up all the debits, it's 187,500. If I add up all the credits, it's 187,500. So you must make sure that your debits and credits actually balance there. Long-term loans, it's only Stormers that have a long-term loan, so the total loan there 175,300, and the total creditors will be those two together, which gives us 229,500. Our consolidated statement of financial position is now basically a copy and paste exercise of our consolidated column here. So that is going to represent our consolidated financial statement. Non-current assets, I put property, plant and equipment separately here. Actually, in total fact, it should have been a one-line item. Property 752,300. There it is. Plant and equipment cost and accumulated depreciation. There's the minus for the accumulated depreciation. Minus, then current assets is going to be inventory, bank and debtors. There it is, inventory, bank and debtors as is. Equity. Now remember, for the equity, it's going to be only that equity of the Bulls, because we have at acquisition date eliminated the equity of Stormers. There you can see we've eliminated that. So the only remaining items there was the 460 of the parent, the 220 of the parent and the 85 of the parent. But then we have added here the gain on the bargain purchase and the non-controlling interest. Now that gain we said is profits. So we have to add it to our retained earnings. So our retained earnings on consolidation is going to be 240,000, the two of it together. Other reserves is that total, and then we also brought in here the non-controlling interest of 37,500, which is that one. Long-term loans was 175,300, and then creditors 229,500. So in total, our statement of financial position is balancing on 1,227,300.